Hello, everybody, and welcome. I'm Anton Pena, Flock's founder, and I'll be your host today at this broker webinar on connected insurance. We've designed the session today to help brokers thrive in a connected world. How? By using connected insurance to drive increased value to broker-client relationships. So in the next 45 minutes, we'll discuss what we actually mean by connected insurance, how this new form of insurance can help win and retain more fleets, and what kind of hurdles you may face when introducing connected insurance to your clients and how to overcome them as well. So without further ado, let me introduce you to the panel of insurance, telematics, and fleet safety experts we've brought together today. First, I'm going to start with Scott Charlie, who's the head of fleets at Ayoi Nisai Doha, or how we call it, Andy is the nickname for the company. He doesn't show it, but Scott brings more than 30 years of commercial motor fleets underwriting experience to the table. And Andy also provides capacity to Flock's connected fleet products. Scott has been very, very involved from the very beginning, so he very well understands what connected insurance can provide to clients and how that enables to provide fairer, more flexible quotes. Welcome, Scott.
Thank you.
Next, we've got Alison Moriarty, who's the Divisional Managing Director for Drive, which is part of the vehicle telematics company Matrix IQ, who Flock also works very closely with. Alison's here to share her perspective on the direct link between connectivity and driver safety, which is one of the areas where she's an expert in. So good to have you on board, Alison.
Thank you very much. Good afternoon, everybody.
Third, we've got Adrian Hyde, who is a driver risk and road safety consultant. Adrian is incredibly passionate about improving safety on our roads, and he brings with him 30 years of experience as well, helping fleets manage risk effectively. Delighted to have you here, Adrian.
Thank you, Anton, and good afternoon, everybody.
And last but not least, our own Tom Rogers, who is Flock's head of underwriting. Some of you may already know Tom because you've worked closely with him. And today he's going to be bringing his insights from the front line of underwriting connected fleet insurance. He'll be sharing insights on why he continues to see brokers succeeding with Flock and how connectivity is changing the game for brokers. Welcome, Tom.
Thank you, Anton. Good afternoon, everyone.
So before we hear from everybody on the panel, I just want to kick things off, setting the scene of what we mean by connected fleet insurance and why this is so important to understand. We all know that the world is becoming increasingly connected on our homes, our cars, and the businesses we interact with, and how all of this are producing more and more data points on a daily basis. This increasing connectivity is driving a huge shift in our clients' expectations. They want greater transparency into what drives their premiums. They want more real-time sharing of information. And they, of course, want to be enabled and incentivized to use that data they know they're generating to benefit their business, but of course, the wider society as well. And for data-driven insurers, this rapid increase in connectivity has also opened up a whole host of opportunities, from better underwriting to fairer pricing to faster policy administration, and of course, ensuring safer fleets. At Flock, we also know that connectivity can help brokers and insurers move from simply reacting when a claim happens to proactively helping fleets improve safety. We've now analyzed more than 70 million miles of driving data and found that it's typically less than 20% of drivers in a fleet that contribute to the large majority of accidents. So harnessing the data that's produced by these connected vehicles, we give brokers the ability to surface these safety insights to fleet managers and they can then they can then focus on improving the behavior of those riskiest drivers as well. And I don't have to tell you the number of benefits that then unlocks for, of course, you from a retention perspective and your customers as well. These interventions can reduce speeding by as much as 35%, which reduce in lower claims and lower insurance costs, of course, for these fleets. So connected insurance will become a powerful tool in allowing forward-thinking brokers to have more informed conversations with your fleet's clients as you engage in conversation with them, by first building loyalty with them, but ultimately also increasing the lifetime value because you're ensuring that renewals life cycle. So that's how we look at connected insurance. That's what we believe it could mean to you all brokers. But I think it is time for me to stop talking and bring the panelists on board. As mentioned, we've got 5 questions, and I'm going to kick things off with the first one. Scott, I'm looking at you to open up with this question. It says, who's this new form of connected fleet insurance for? Who do you think it is for, Scott?
Okay, thanks, Anton, and thanks for that introduction. Yes, who is this new form of connected fleet insurance for? Well, I think in simple terms, it's really for any clients that want to better manage their fleets, and particularly on a proactive basis. And that those fleet operators can obviously then be rewarded for improving the underlying risk to their fleets. So really, it's really for clients that want to engage on that basis, and for clients that want to get a much better understanding of how their fleet is operating, and particularly to get risk insights from their insurer, which I think is particularly useful throughout the policy period. So obviously, why would you want to manage your fleet more closely? Well, a better managed fleet usually leads to reduced motor accidents, so that's obviously going to be a good thing. Improved safety across the fleet as well. Again, most fleet operators have a duty to their employees and drivers to make sure that, as you say, safety is always at the forefront of every consideration, really. And obviously, a better run fleet has implications on the insurance as well. So it's suitable for operators that not only want to try and control their future insurance premiums, but also want to sort of have more control over current premiums. And as you say, I think obviously Flock have a product that has a rebate clause built in, so that, as you say, if the risk is better managed through the current period, then they get money back at the end of the year. So those sort of rewards in there that are sort of very sort of tightly related to how well they manage the risk.
Tom, it's undeniable that many operators will be thinking about managing those premiums, but when do we find customers that are interested in managing that risk, as Scott was talking about?
At many points in the process. If, like, quite often we're approached by companies that are at the beginning of their journey. Quite often they're talking to us and they're talking to people such as Alison and Matrix and Adrian, and they're starting on that journey of, like, we understand there's a responsibility here. We have a corporate responsibility. Quite often we've put it back because we've not seen immediate return on investment. We want an insurance company that also buys into the same concept. So it starts quite often at the beginning of the journey. We've got other customers that have obviously are in that middle part of the journey where they've already connected most of their vehicles, but they're not seeing the benefits of that, or they're not getting the cooperation from other insurers out there who potentially want them to work with them and get them to better understand the data that provides. And also those at renewals that might not have had the best time, or might not have had the best claims experience to date, and are looking for solutions and new ways to manage their fleets. So I'd say, and I would say that because I work for Flock and obviously I'm pro connected insurance, but I'd say it's for all at any point in that journey. So I don't know if you've got any.
Adrian, you probably connect with customers that have had that realization of needing to become safer. What is that catalyst that makes customers start thinking about safety and get in touch with you, for example?
I would love to be thinking that they get in touch with people like myself and Alison because they care about their employees and they want to do the right thing for them and the right thing to protect their legal duty of care responsibilities. In reality, sometimes it's often when something goes wrong and it's a looking back and thinking, what on earth could we have done differently? I'm a massive believer in you don't know what you don't know. And you could line up 10 company car drivers and the law of averages, 2 or 3 of them are probably going to be a little bit of a risk to that business, but we don't know who those 2 or 3 are necessarily. And therefore to treat them all the same is probably the wrong thing to do. Whereas if we have some form of intelligence that can say, well, 70% of our driving population are performing really, really well. We've got concerns about the other 30%. We know exactly what those concerns are. We're in a much, much better place to address those issues.
Alison, any further thoughts on that? When do customers get in touch with you to manage their risk?
I think I have to agree with Adrian. I think sometimes it's either if something's gone wrong or they're looking more at the savings rather than looking at the duty of care. I mean, it doesn't really matter what that driver for them is as long as it makes them a safer fleet. So I don't really ever care why they've come to us as long as they've identified that they want to be safer. But I think looking at the kind of question as it stands, it's for everybody. I look back, I'm from an operational background, so I've looked after the safety of a lot of large fleets in an operational role. And the best thing I ever did was to bring my insurer and broker into my fleet steering group. And I think what Connected Insurance does, I think it creates a partnership between the fleet manager and their insurer and broker, which has got to be good because it's win-win for everybody if people are safer on the road.
That's an incredible segue to our next question. Before we do that, I want to remind everybody that we've got our Q&A open, so please feel free to drop any of your questions at any point throughout the session today. Second question, and thank you, Alison, for that segue, says, how does Connected Fleet Insurance benefit brokers? Tom, I'm going to open it with you because I know you work very, very closely with many of the people in the room.
Yes, thank you, Anton. I think we touched on a number of these points already in terms of the value of what Connected Insurance can bring, but it's a multitude of things, especially with brokers. If brokers ultimately serve the customer, although they support the MGA or the insurer, it's the customer in which they serve. So things that we've touched upon, such as risk management, fairer pricing, improved claims handling, policy management, that's what lumps it together. And this value, hopefully, and the feedback we've been getting internally is it helps sell the policy to the customer in the first instance. So brokers are feeding back to us that with this policy, it brings the value. Clients can see a clear journey of how they can start bringing insurance costs down. The risk management and risk insights that come alongside the Connected Insurance policy helps them understand risk a little bit better. I think sometimes there's this uncertainty with insurance. And I mentioned about the return on investment. I think quite often customers fit the telematics devices, and quite often from my past of being a broker, I would quite often go to the insurer and say, well, this customer's invested a significant amount of money in telemetry devices or other risk management. Is there a way of getting a policy discount off the back of this investment? And quite often the answer used to be only when we see the result in a claims experience or in a claims record, and that result sometimes had to be a 3 or 5 year picture. I think this new world of Connected Fleet Insurance offers brokers a chance to sell that immediate return on investment with a clear policy that allows for that return on investment up front. The fairer pricing also happens at new business and renewal stage as we get to understand a lot more data points. We replace assumptions about a risk, such as the geographical exposure, their mileage, how they drive the vehicle. All of that gets replaced with actual data from the telemetry device as well. So we get a lot more smarter at pricing and a lot fairer at pricing. And I've touched on the claims, but things like crash detection, things like automatic FNOL, first notification loss, gives us the opportunity in the future to start reducing the claims costs, because we've all seen how claims inflation and how inflation is generally trending, and we need to start using some of this data from Connected Fleet Insurance to kind of buck that trend and start moving it backwards.
Alison, you talked about partnering with brokers as a safety experts. At what point would you involve that broker, and what would you tell them initially? What was your pitch to them to bring them to the table?
So obviously I was part, because I was the risk director for the fleet, I was part of putting the fair presentations together for when we were going for renewals or going out to the market. And it did feel very almost like an isolated role rather than working together to look at it. So quite quickly, I put the steering group together and contacted the insurers and brokers, and we just talked about the mutual benefits. So obviously for my fleet, there was reduction in crash damage, fuel usage, SMI cost, all that from driving properly. And for the insurers and brokers, you know, we were keeping within our loss ratio, so there was a definite benefit there from us working together. And they were very, very keen, both the insurer and the broker, and actually worked with us to even put some money into different training aspects and things we did with drivers. So I think the earlier you can, the better, because it's absolutely a mutual goal to reduce your risk on the road.
Scott, you've worked with many brokers, and we just mentioned that concept of the loss ratio from the customer's view almost. How do you work with brokers to manage that number and not just read it and provide a price back, but instead work with them throughout the life cycle on that number?
Well, I think it's fair to say on traditional fleet insurance, there's a lack of proactivity generally, that quite often on your bigger clients, you may have quarterly claims meetings and you review the performance, and within that sort of discussion, then there'll be sort of wider risk management discussions and looking at performance of the fleet, and then you get to renewal. But it's almost after the event really that sometimes it's very reactive. Whereas obviously with a connected insurance solution, then the whole basis is it's got to be a lot more proactive. So as you say, with the Flock product, for example, they provide a lot of risk insights, so that you've got a portal that a fleet customer can look at, and they can see live or almost live data, and they can get a good feeling of how their vehicles are operating, what sort of claims activity they're having, and really sort of get insights from that. And Flock have obviously got the ability to add to that as well. So I think it's very much around, rather than waiting to the end of the year and realising you've got a big problem to sort out, you can spot the early signs and deal with it on a more proactive basis.
Thank you. I'm going to take us to the next question, which talks about the not that pretty side of connected policies. Alison, I'm going to open it up with you. Are there any hurdles that we need to overcome to drive the adoption of this type of insurance policies? And let's also think about the audience we've got in the room. How can brokers interact with us when overcoming these hurdles?
I think the hurdles are perhaps as much for insurers and brokers as they are for the fleets. And I think they're the same hurdles that actually, when we kind of look more into it, become the positive. So I think, you know, historically insurance, it's a very traditional business, and things have been done in a very similar way for a long time. So I think the biggest hurdle actually is that big mindset change, so that people don't just, it's almost like, you know, clear the decks and let's think what's the best way for us to actually give insurance based on risk. And I think, you know, in the past, everything's based on claims history. And I think Tom touched on this before. So it could be 2-3 years old, but we're looking at that kind of history going back rather than looking at what's happening now. And I think it's getting people to start to think about not the sort of perceived risk, but the actual risk of that fleet as it stands today. So getting those, you know, like links to telematics and seeing how drivers are actually driving now. It's a benefit obviously to insurers and brokers, but for a fleet manager who may be looking on this as something sort of big and scary and new and not something they've ever had to think about before, what it does is it gives them the chance to now say, yes, okay, maybe historically we've not been great, but actually in the last 3 or 4 months, we've done absolutely loads to lower our risk. you know, we've put lots of things in place. We've done lots of training. We've got telematics in. We're talking to drivers. And I think it's, you know, one of those things that will encourage fleets to make changes and make them quickly, because if they can see that affecting their insurance premium in a much more dynamic way, rather than waiting another 2 years to see that coming through, I think it's definitely going to drive change in the industry.
Adrian, I can see you nodding, and I know you're a big fan of very carefully choosing the data that's put in front of customers. What is the complexity around using that connected data and manage risk?
Yeah, I mean, as you know, Anton, I'm a huge fan of technology helping to drive safety, particularly with drivers, and purely simply based on, I don't think any driver sets off with an intention to have a crash on a particular day. They're just doing what they normally do. And I think if the drivers are provided with information that can actually help improve the way they drive, they're probably going to open that with open arms. What I tend to find with the clients I work with is that the telematics providers are brilliant at providing them with oodles and oodles of data and really fancy dashboards. I'm very proud of that as well. And the poor fleet manager, and I go back to what I was discussing at a previous time, is not every business has a fleet manager who understands driver risk. So suddenly they get this big dashboard with all these bar charts and reds and ambers and greens, and what do they do with it? So I think what we've got to try and do is let them see the wood for the trees and get them to be able to hone in on those areas of risk and what it is they need to do to address those areas of risk. So I think, you know, there's the information we provide is fantastic, but it can be a bit overwhelming for some.
Thank you. Scott, you probably still work in the world of traditional policies as well. When brokers come and talk to you about connected products or products that use data, what are the key challenges that have to be overcome or maybe explained to brokers?
Well, I think one of the challenges, particularly from clients that have been with traditional insurers, is that they're not used to sharing that telematics data with their insurer. So that's one hurdle you've certainly got to get over. And yeah, for whatever, there may be a wide range of reasons why they've been reluctant to share that data with their insurer in the past. But with a connected product where you've got good quality risk insights coming back to the client, they're going to see the benefit of that very quickly. And I think that the difficulty with telematics is that the fleet manager or whoever's managing, who's got that responsibility for managing that fleet of vehicles, rarely has the time and the resource to devote to trawling over all the telematics data and then making sense of it. So the whole benefit of this type of product, that, as you say, you've got those risk insights coming back to the client where it becomes a lot more visible and a lot more quickly. And yeah, as you say, particularly on fleets that haven't got a whole risk management and a whole fleet team in their operations. So I think that's the sort of sweet spot for me for sort of target clients.
Another brilliant segue. I promise we've not practiced this before. This is just a conversation we're having here. But Tom, I'm looking at you with the next question. Adrian was talking about making sure that we don't put too much data in front of the customer because we can confuse them. Scott was talking about using that data to deliver additional value. Talk to us about how you think brokers can use all of these data we've been talking about producing from the use of connected policies.
Yeah. Yes, I think one thing brokers obviously are brilliant at is understanding their customers. And I'm not just talking fleet or connected insurance, it's understanding their whole risk and the insurance policies they need to mitigate those exposures so they don't end up out of pocket or out of business. What does connected policies do? I think it allows the broker to get a deeper understanding of those risks. The exposures we kind of touched on earlier, the driving behaviour elements, brokers can dive deeper into that. The connected policy we have are kind of unique to the exposures that you'll find that directly impact your insurance costs and claims, both from the frequency standpoint and volume, but also from the severity. So we're trying to reduce those claims. So an immediate benefit for brokers is they get that level of deep understanding. They can work with a client on risk management solutions. They can work with fleet managers or other people in the business to kind of educate them on these elements, these small elements to start with. No one wants to overburden them, as Adrian said, but on the small things they can change within the business that can, you know, if it stops 1 or 2 claims, it could have a massive impact on their price. But the big word that's been coming across recently is safety. Obviously, reducing one potentially serious accident for a fleet is huge. And over time, if we can make these changes and as connected insurance policies grow, brokers can use that data to make the road safer. And I think we can all relate to that. We all have friends, family, children. If we get the comfort that roads are ever so slightly and getting more and more safer as a result of these changes from connected policies and risk management, I think we'll all sleep quite well at night. And ultimately, I think quicker resolutions to claims will give better service for brokers, so they can use the data to quickly resolve claim solutions, get their customers back on the road, keep their businesses running. We could go into a multitude of benefits what the data can bring for the brokers and what connected policies can bring, but there are a few that I can think of off the top of my head.
I can see many nodding heads. Alison, you've worked with brokers when quoting, as you mentioned before. You as Matrix IQ also work a lot with brokers throughout the policy life cycle. How do you do that and how do you help them?
I think data is king, everybody knows that, but exactly as Adrian said, I think what we do is actually make the data usable. So we actually put that in a format and give people insight so they know exactly where to put the resource. Because I think we've got to be, really clear that there is a limited resource out there, and I think brokers can help fleets to target where they're going to have the most effectiveness. And I think getting the most bang for your buck is really important. But I think from insurer and brokers' perspective, the whole thing around connected policies as well expands your market somewhat, because I know, speaking from somebody who is operational, if you haven't got the greatest safety record with your fleet, you tend to go for a blended insurance because you kind of want to almost bury the fleet part of it in something else. Whereas I think this makes it very attractive to have standalone fleet insurance, because you actually can look for the rebate at the end, or you can, look for somebody actually dynamically looking at what you're doing day to day. So I think there's a real strength there for people to actually go out and have standalone fleet insurance as well.
Adrian, not every fleet has the luxury of bringing you into the room, either when they need it or when something went wrong, as you said. How do you think brokers can help you and us spread that great work of safety you're doing?
Yeah, I think probably it's just asking that question. If it is that you're going to be quoting a business, just to ask the questions before we do. Could we just ascertain what you do within the business to manage driver risk? And that is something that I think will come as a little bit of surprise to some businesses, because they'll be thinking, what do you mean manage driver risk? And driver risk management, as Alison will know, has many components to it. So if we could just ask the questions, well, have you got a risk assessment for your activities? Do you have a driver safety policy and handbook? Do you offer driver training? Do you use the data that you have with regards to accidents, collisions and claims to help inform and to sort of plan your way forward? If the answer is no, we don't do any of that, then conversations with myself and Alison would be very welcomed, because I'm pretty sure if you're taking a portfolio to the underwriters and say, look, I've got a really well managed fleet here, now they do, you're going to come back with a more favourable quote than with a business that don't do anything.
So let me pull from that thread, Scott. Adrian's telling us that brokers should be asking those questions. Sometimes brokers will be getting answers to those questions that we don't want to hear, and they'll eventually get to Tom or you and present a case. When that happens, when a customer is not necessarily responding with the right answers, what would you want the broker to do in that case with the customer in the context of connected policies?
Well, I think it's really the broker's job there to to try and advise their clients accordingly. So if you're not getting the right answers in terms of the fleet driver and management, then I think it's really down to them to try and express the importance of putting that right, and obviously to put that right, and then try and monitor the performance going forwards. And obviously with connected products, you've got a lot more sort of tools at your disposal for making sure that performance of those drivers is improving going forwards.
Thank you. So we've talked a lot about safety and saving lives, a bit less about premium today, which connects nicely with the last question we've got for the day. Adrian, I'll open it with you. What does connected insurance bring to society as a whole?
Yeah, I actually think it brings an absolutely massive benefit to society, because if you think about it, if you take a road traffic collision, let's say you passed an incident and you saw a police car, an ambulance, a fire engine, you'd be thinking, well, that looks bad. And that is going to have an impact on the drivers and the occupants of that particular vehicle and the emergency services and attendants at the time. But think about this as like the brick thrown into the mill pond. You get the ripples that go out, don't you? So the individuals within that vehicle no doubt will have family and friends who are going to be shocked to hear that they've been involved in an incident. If there are fatalities involved, then those ripples go wider and wider and wider, don't they? So if we have some means of helping businesses to have safer fleets and therefore have fewer road traffic collisions, that has got to be an absolutely massive positive impact on society as a whole. I don't know what your thoughts are on that, Alison, whether that resonates with you.
Yeah, absolutely agree. And I think, as I said before, I think in terms of it, in society benefiting from it, what connected insurance does is give an immediacy to fleets to want to improve the risk profile, because they can see that that's having a direct financial effect. Now, Adrian and I both are safety anoraks, and the only thing that really matters to us is improving safety. But we have to understand that, like I said before, if cost is the main driver for people, then connected insurance is a really good way of pushing people to do things quicker. And the quicker people improve, then obviously the safer the roads are. And, it's just another aspect of safety. And I think as soon as people can get to grips with the fact that it is a work activity, driving, it's not just something bolted onto the day, and you have to have all those things in place that you would for any other activity. As Adrian said, you need to have you've got to have your risk assessment, your safe systems of work, all that, which is obviously probably more resonates with me and Adrian more, but it does, everything flows through, because it flows through to actually that fleet's safer now. There's less crash damage, there's less vehicle off road, the insurance premiums can be looked at. It is like that's the good ripple effect, as opposed to sort of the negative ripple effect, Adrian, of when you do have an incident.
I think just one thing to add to that is that Department for Transport tell us that 95% of collisions have driver error as the main contributory factor. Myself and Alison think that's a fantastic stat, because that means we can do something about it. And I think this is where connected sort of insurance comes in, because if we can give drivers and fleet managers and businesses the insights into where things are going wrong, and there's a desire to put things right, then we're on a winner.
Tom, about to go to you, but before we do that, just a reminder to everybody to submit your questions. We can see some popping up here, which is fantastic, but we probably have a few minutes before we open up your Q&A. So make sure your questions are asked in the Q&A channel. Tom, any additional wider societal benefits you see or you hear from brokers they're keen in unlocking with connected policies?
I've got, so my opinion is it'll probably, touching on what Alison and Adrian went into, if the roads become safer, ultimately it will reduce premiums in the longer term. But also one thing I think connected insurance brings to society is how has it changed the perception of insurance? I think a lot of people who don't have the accidents, don't have the claims, and I get it in my own family around our insurance as a con, they don't see the other side of it. And we've all in this panel, and most people in this call see the ugly side of insurance and the claim side of insurance and know exactly why it's there. But connected insurance will helping them manage risk, be more transparent, and letting them understand exactly what the factors are and what it could mean. Help bridge that gap and educate, and ultimately I think that's going to be positive for society as a whole.
Scott, any final thoughts on this question before we move on to the Q&A?
Yeah, not necessarily the benefits in society, but that there are a lot of benefits to fleet operators beyond just improving their fleet premium. I think obviously if they can reduce the number of accidents, then that has a knock-on effect. I think if they can improve the way they're operating their fleet, so they can improve if they're delivering goods, for example, they can deliver them more efficiently, improving their customer satisfaction, customer service, and improving their reputation. So if they avoid accidents, then it means their vehicles are on the road regularly doing what they should be doing. And there's a sort of bit of a brand protection there as well for fleets. So as you say, obviously telematics is used for a wide range of purposes, not just avoiding accidents. And there's a lot of sort of secondary benefits as well.
Brilliant. Thank you very much, everybody, for asking tough questions, but I'm sure the ones that are about to come are going to be even tougher. So let's kick things off with the questions I've got here on the screen. We're going to start with, I've got more screens than I've ever had in front of me. I'm gonna try to figure this thing out first. The first one, which comes from Simon Dex, a long-term flock friend, says, how does harsh braking affect the rates? Oh, I think that's what it says. Tom, do you have any thoughts on this?
Yep, great question from Simon, as expected. In truth, I think we've launched, right, going back to what Adrian said about not overly complicating it, with connected insurance being a new concept, we've launched in an area which has the biggest impact, and we've deliberately chose speeding as the main factor for our ratings thus far. I think speeding contributes towards 20% of fatal collisions and a further 16% towards just general serious collisions. So we're correlating claims with driving behaviours. That doesn't mean that harsh braking isn't considered important. We know it's linked directly to driver distraction, and Alison and Adrian will likely know a lot more detail than I do about that. And we certainly will be looking into all of it. But we've launched this product that we've got, especially at Flock and others as well, with speeding as the utmost due to that immediate impact on claims.
I mean, I would add to that, not 100%, but the correlation between speeding and harsh braking is pretty clear. So if people are having a lot of speeding events, they're generally having harsh braking, which is, there is distraction there, driving too close, all the things that, combine to give those rear end shunts, which we know are unfortunately all too frequent. So, but yeah, I mean, I totally agree. Our absolute target when we're looking at anything is all around speeding.
Thank you, Alison. Don't go anywhere, because I think I'm going to ask you the next question. It says, and it comes from an anonymous attendee, so we'll do our best to provide the best response. How can we best convince fleets on traditional policies for many, many years that connected insurance will be a benefit?
I think really we touched on it before. I think if you have had traditional insurance, but if you are serious about improving your fleet risk, and I think this has got to be what it's all about for me, it's people actually lowering the risk of the vehicles on the road, then connected insurance is absolutely the best way to go for fleet, because any improvements you're making and any efforts you're putting in can be rewarded pretty quickly. So you're not waiting for that to reduce collisions and then that to show up in the next 12 months, 24 months, 36 months for your claims history. You can actually do things about it now. So I think it gives fleet a real impetus to start to look at lowering the risk. And then obviously all those additional benefits that come with, tyre damage, SMI costs, lower fuel usage, all those sort of things will really, for a fleet putting the effort in, will make huge rewards, and the return on investment is usually pretty quick.
Scott, the next question names you, so I cannot answer this question to anyone else other than you. It says, does Scott see this kind of insurance benefiting all kind of fleets? Would it be a benefit for heavy vehicle fleets, for example?
Okay, yeah, obviously we've touched on what sort of fleets would benefit from this type of products in one of the earlier questions, but as you say, most fleets could benefit. I think one of the key things is they've got to be prepared to fit the telematics devices and share that data with insurers. So I think that would be the first principle. But obviously then you've probably got the issue that the best, who's going to benefit the most? Well, probably the higher risk fleet operators. So that could be in sort of where they're involved in activities that produce a lot of claims. So courier is a good example, but also on heavy goods fleets, that would also be the case, because obviously, unfortunately, where the heavy goods vehicle is involved in a motor accident, it tends to be quite a serious one, and you can get some quite significant injuries. So there's certainly a benefit to having connected insurance on a heavy goods vehicle fleet. So I think, as you say, I think also going back that to simplify things, I think the Flock product is very much being refined as they go. It's been in existence for sort of about 18 months now, and obviously Flock have been refining their products to make sure it really suits their customer base. And as I think Simon mentioned in his question around harsh braking, but I think as the product develops, then I think that would particularly be sort of interested in a heavy goods vehicle fleet, because I think that's a particularly important sort of risk flag, I guess. And yeah, as you say, I think as you say, connected insurance can benefit most fleets, and why not heavy goods vehicles?
Thank you, Scott. We spend a lot of time thinking about heavy goods vehicles at Flock. So if you're interested in it, definitely come and talk to us. The next question comes from Kimberly Jolly, who says, how does connected fleet insurance change the roles of classic insurance jobs like underwriters and claims investigators? Tom, you work at an insurtech. What do you think?
I think it gives us more, I'd like to say power, but it gives us a better view of everything. Like, we get much more data points. And if you're geeky like me and like looking at data and like trying to quantify it and analyze it, I find it fun. So like, we can look at some of the bits and sometimes not understand it. I think with the extra stuff, the extra data we get the ability to do so. And that's just not me alone. I love to take credit for that. Like, you do see the structures in insurance companies changing. You do like a growing influence of data science and actual assistance in insurtechs, and that's because of the vast amount of data points and the need to analyze and make more bold decisions. I think sometimes it's easy to take high level assumptions in underwriting that, you know, one particular area is bad, or this part of your segment is just a poor segment, so let's just pull out of it altogether. I think the data allows you to drive down granularly and make some more informed decisions on that, and not take that gun-ho approach that you might traditionally otherwise taken, that I've personally taken in the past.
Thank you, Tom. We've got another great question from an anonymous question asker here, and the team I've got around me have told me that I should answer the question, so I'm going to do that. The question says, how do you recommend handling objections to installing or switching telematics to facilitate connected insurance? And this is a question that's very, very close to the work I do at Flock. We spend a lot of time thinking about improving connectivity, making it easier or simpler for fleets to connect to us. And the way we do that is by avoiding any change or any switching or any installing as long as it is possible. So if a customer comes to us with an existing telematics solution, we'll try our best to connect to that existing telematics solution, and Matrix IQ are crucial in the process of doing that. For example, if the customer then doesn't have a solution, that's when we work very closely with them and work with their team to install those vehicles as quickly as possible. But I think the important thing here is that we try to avoid it the telematics industry or the telematics insurance industry is an industry that was built around asking customers to install devices, and we instead believe that we should try to avoid that step. As a broker, the best way of avoiding that is by working with us, by helping us understand what solution the customer has even before we've potentially quoted you. And if you come to us and tell us about specific solutions the customer has, we often go and build bespoke integrations for customers to connect to us again from day zero without that customer having to install anything. So the objection handling, I'm slightly changing the question, but the objection handling should be done by letting us do the hard work, which is often enabled by talking to us about what the customer needs. So thank you, Anonymous.
Anton, I just wonder if I could just add something to that. So where it's deemed that some technology in the vehicles is a benefit, in my experience, and I would imagine Alison will back me up on this, it's the whole communication piece and the process that business went through to introduce it to drivers. If you just go and install it, Big Brother watching, they'll go kicking and screaming. But if we can sort of have some rationale behind, well, this is why we do it. It's all about you and your safety. And if the business will be brave enough to introduce some form of driver reward scheme, so there's something in it for me, because let's face it, that's what we all like, then you're going to be finding it will be a little bit more palatable for the drivers to accept technology in the vehicles.
I think you're right, Adrian. One of the things I usually start off, particularly with the bigger fleets, is to have a meeting with the unions to explain what it is, why it's there. And I think, once people believe that it's there to make people safer and to get people home safely at the end of the day, and that is the number one priority, I very rarely have found that people then don't get on board with us. And once a union's on board, then usually the drivers are on board as well. I think it's using it as an improvement tool, not a disciplinary tool. I think that's really important as well.
Absolutely love those answers. Thank you. The next question comes from Paul Middle, who says, what do you believe is holding brokers back from engaging with telematics solutions from insurers? Scott, looking at you, what do you think it's holding customers and brokers back?
I guess there's a little bit of skepticism from brokers, and I guess it probably requires a fair bit more work initially from brokers to understand the products and how it works and how clients are managed through the policy life cycle. So I think that's, as you say, if I was a broker, I wouldn't sort of jump in with both feet without trying to understand what the product is, what it does, who it's best suited to. So I can understand there's some hesitancy there, and I think and the best way to do that is to get to know a lot better, get to know the product better. And yeah, I think just through experience, brokers will become more comfortable with it, and they can see they'll gradually see the value added that we've talked around today. They'll see that for their clients through those sort of risk insights and improvements of risk.
Thank you, Scott. I'm sure Tom will tell you how to get in touch with him at the end of the session. Next question comes from Matthew Gregory, and he says, we've spoken a lot about driver risk and claims today, but is it worth considering risks around maintaining fleets, particularly with rising costs in the current economical climate? I'm going to choose you, Tom, but feel free anyone else to jump in as well.
Yeah, I think there's many benefits in the economic climate. I think I've done a few talks on this recently around inflation. I mentioned it previously. I think telematics costs has come down dramatically. I think there's many solutions, and without plugging Flock, we have a multitude of solutions that are very beneficial to customers. And it goes back to that return on investment piece. I think we can reduce, and without going over old ground, we can reduce claims down dramatically and reduce the insurance costs. We can provide that return on investment, and some of that can be instantaneously, and clients can ultimately see on an ongoing basis what they can get from it. So I think customers are going to keep looking in this current climate to save costs as much as like insurers may be looking to increase costs as a result of inflation. That generally puts more people to market. But then some of these solutions and connected fleet insurance solutions will provide that extra benefit because we'd be able to sell a longer path to longer savings and bigger savings, wider than just the cost of telematics or insurance. It brings down insurance in the longer term as well.
I also think from a fleet's perspective, and I absolutely understand and acknowledge that people are looking at how to save and maybe just pushing the scheduled maintenance a bit further than they would have done maybe before. But I think it's really worth people talking to fleets and explaining to them that actually when you look at SMA, so the maintenance and repair and servicing of vehicles, actually the only thing that using connected insurance can do is to improve that, because the unscheduled maintenance will come down dramatically. So I was speaking to one of the biggest SMI companies in the UK not that many weeks ago, and they said that well over 50% of unscheduled maintenance that comes in is due to poor driver behaviour. So I think if you look at it in the round, that, yes, get your scheduled maintenance done, but actually there are ways of, if you improve driver behaviour, your unscheduled maintenance costs will come down dramatically.
Yeah, there's also one interesting thing. I think we talked a lot about telemetry in connected fleet insurance, but cars are generally becoming connected more and more each day. And I think by 2030, majority of, well, certainly all new cars on the road will be connected. So there's a longer term play here. It's not just the immediate and telematics devices or camera devices. Yeah, we know that's kind of where we are today, and then we've got this merged world with the new mobility solutions coming through. But in the future, I think all vehicles will be connected, and this data will potentially be, I'd like to say free, but obviously we know OEMs like to additional money along the way, but we'll certainly keep the costs coming down. So there's that play as well.
Thank you, Tom. Final question, again from an anonymous sender. It says, are there difficulties comparing and analyzing data where fleets have multiple telematics providers? I'm going to look at the connectivity expert, Alison, but again, feel free anyone else to chip in.
Yes, so that is a problem, and I can't really do this without talking about our product, Anton, so I hope that's okay. We realised this was a big problem for brokers, insurers, also for leasing companies to an extent, that if you've got on your books, you may have 12, 13, 14 different telematics providers within different fleets. So the way we work with Flock is that our SmartLink takes API feeds from all the different telematics companies who all have different parameters. So it's very difficult comparing like with like. We normalize that data and then score it evenly. So it doesn't matter how many different telematics providers you have, you can see sort of from 1 to 20 where your highest risk is and where you need to put the most effort in. It is difficult, and I think it's only going to become more difficult as more and more telematics companies come on board. But I think, as you say, the new vehicles coming out, the OEMs, we're taking feeds from all those as well, and that will become predominantly, I think, where the feeds and the information comes from as the years go on, and the older vehicles with the actual kind of black box technology go off the road.
Completely agree, and can't wait to see that future become reality. But we're out of time. It's clear that we could keep going and going for hours with these questions, but we're gonna have to stop now. Thanks everybody that joined in today. I can see the number of attendees and it's barely dropped, which means that we've kept everyone engaged. So of course, massive thank you to all of our incredible panelists as well for a brilliant discussion. I'll quickly turn back to each of you just to tell us how people can reach out and connect with you, because I'm sure there will be a number of questions you'll have to continue answering after this. Scott, how can people get hold of you?
Oh, pretty old school, really. So yeah, just by email is probably the best way.
He also hangs out in the city, if that is, yeah. Alison?
Yes, email or LinkedIn. Either way, I'll get back to people as soon as possible.
Adrian, I can see a bunch of QR codes behind you. I'm sure they work to get in touch with you, but how else could we hold of you?
Yes, it can be by scanning the QR code over my shoulder and LinkedIn, or you can contact me by email. It's adrian@adrianhydeconsultancy.co.uk, and Hyde is with an I, not a Y.
Thank you, Adrian. Finally, Tom.
Thanks, Tom. Yeah, if there's any brokers obviously clearly interested in working with Flock, then you can reach out to me on LinkedIn. Just search Tom Rogers on there and hopefully I'll come up. If there's anyone else that's interested in finding out a bit more about the product, please do reach out.
And once again, I'm Anton Pena, and you can find me on LinkedIn by typing Anton with a double T, Anton, Pena, Pena. Or if you want to know more about Flock, all you have to do is just go online and type flockcover.com. Many of our partners are also listed there, so you'll find many of the brands we've had around the panel on that website as well. We look forward to hearing from you, and thanks again for being here today. Have a lovely festive period, everybody.